I'm going to go into risk management. Now, when we buy our crypto, we put our crypto in our wallet or whatever. Now, we need to know how to manage our risk. When you are investing, like I said, the dollar cost average strategy is a very important strategy. Let's say, for example, you have $2,000 and you want to use it, or you can say $200, depending on where you are, and you want to use it to trade or invest. A risk management strategy says that, look, you are to use, if we are trading now, break your money down, like I said, into 5 places. And let me say, for example, you have broken $1,000 into 5 places, or $2,000 into 5 places. For $1,000, that will be $200 per trade. Keep the remaining $800 in a decentralized wallet, like I showed us yesterday. You can leave the $200 in Bybit or Binance for the purpose of trading. Why is this an important principle? If you do not do it this way, you could simply end up being tempted emotionally to use your money to trade and lose everything. And when we go into live trading sessions, we'll see that it is very important for us to have backup capital stored in a particular place. It's very, very important for us to have backup capital stored in a particular place. So in everything that we do, we always work on risk management. We are not, of course, I think this is better reflected through the process of live trading. So I'm very brief with this. When it comes to crypto, I mentioned at the beginning of the class, and I was answering Paul's question. Your lack of knowledge is the risk. You are the risk. The act of trading is not the risk. When you properly manage your capital, when you properly manage risk, you get to see that your capital is protected in an efficient manner. So I'll be very brief with that. So I'm going to go into the next topic, which is going to be airdrops. Now, if we can see what is on the screen here, I'm going to read it out. It's been repeated for years, and it's on the most obvious advice. But for those of you who haven't digested it, if you don't have much cash and you are looking to get capitalized, there is no greater opportunity in this world than farming airdrops and really change your life. So with that, we have entered airdrops. The concept of airdrops, it's a whole course on its own, but I'm going to do my best to make it very brief and in a way that we can understand. What does an airdrop mean? An airdrop means that people that created a crypto project, they are giving out free coins to their community members. They are giving out free coins to people that interacted with their project during the course of preparation, and they are going to give you free coins. That's basically what airdrops mean. Now, I want us to be very clear on this. When people create a coin, they are not creating the coin for you to get rich. They are creating the coin for themselves to get rich. I showed us an example of Trump yesterday. I'm going to show us another example here. Here we have this coin called Optimism, Optimism. Now we can see from the allocations, I'm going to zoom into that. We can see from the allocations here, 25% was allocated to the ecosystem fund, 19% to core contributors, 17% to their investors, 20% allocated to this ROPGF is another team of investors. So now the 90% is going to be allocated to airdrops. Now, what does this mean? Meaning that they have taken the rest of the funds for themselves and they have allocated 19% to airdrops, people that interacted with their protocol. Make no mistake, the people that they will give this airdrop to, they are also part of the people that will benefit from it. Now, like I said, how do you partake of this airdrop? How do you get to benefit from when a project is doing an airdrop? Now, there are basically 2 kinds. I'm going to go into Telegram now to show us a particular way for Telegram airdrop. So that's not a major concern in this class. I'm going to go into this channel called Airdrop King. Now, if we go here, we can click, let me say play tap coin. Play tap coin. This is like a crypto project now, what we have on the screen. Here, basically, they are going to get you here to do different tasks on their crypto project or on their interface here. They're going to get you to do different tasks. And with each task you do, you gain coins and all that. And at some point during the airdrops, if you complete the tasks based on what they tell you to do, their criteria, you will qualify for their airdrops. This is the simple version. Then there is also the more complex version, which I'll go back to what we have on the screen here. The more complex version is something like this. What does this mean? We need to write in the screen here. What does this mean? Now, there is this coin called Arbitrum. I showed us how to use their network yesterday to transfer coins back and forth. If you remember, the name of the coin was Arbitrum 1. Now, when they launched their project, I'm just going to use this to show us the benefit of how airdrop works. This is different from what I showed you on Telegram. This is what we have entered now is basically called chain farming. That's what I'm going to call it, chain farming. When they launched, now, all you needed to do was sacrifice, let's say, $50, or let's say you have $200. You are going to create 4 different wallets, 4 different wallet addresses. Put $50 in each wallet address and be interacting with their blockchain. That's basically what you are required to do. Before I explain, I want to just show us the advantage of this. With each $50, if you did Arbitrum, with each $50 you invested, you would have gained a little over $1,000. So if you broke down, you had $200, you created 4 separate addresses, and you interacted with their blockchain, you would have been up $4,000. That's $3,800. You'd have been up $3,800. What did they require? How did they require you to interact with their blockchain? I'm going to show us this practically. Now, the first thing they say here is bridge to Arbitrum. What does bridge mean? I'm going to go to our MetaMask. Bridge means that you are simply moving funds from one blockchain to another. If I were to click USDT, or let me click Ethereum here. Let me say this is Arbitrum. And let me say they wanted me to bridge. I'm going to click bridge here. What this means is that they wanted me simply to, let's say, select network. This is Arbitrum. You send, let's say I'm sending Ethereum. I'm sending Ethereum to let me just use Polygon as an example. If this was a real example, you connect your wallet to this platform, and they will access the funds in the wallet to do the transaction. What this means, they simply wanted you to send your funds from, let's say, the Ethereum network. Let me use the Ethereum network to the Arbitrum network. That's what they wanted you to do. Send your Ethereum, your ETH, from the Ethereum network to the Arbitrum network. That's changing blockchains. A bridge is like moving from one blockchain to another. That was one task that they wanted you to do. They wanted you to interact with their blockchain. So you will need funds to do this. That's why this kind of works with investment. You put $50, and the more wallet addresses you have, the more it works. The more what I'm saying works. So that's what you would have done. You would have maybe created 4 wallet addresses and interacted. That was the first criteria. And the second criteria is conduct these transactions over time. Usually, the way an airdrop works is that you do not know when an airdrop will be released. You do not know whether it's going to take 9 months, whether it's going to take a year. It's something that you need to just do maybe 3 times a week and maintain consistency for as long as possible. Interact with their blockchain for as long as you can. Let me also go to Trust Wallet to show us another example. I'll use Uniswap. This is a decentralized exchange. I spoke about decentralized exchange yesterday, but we didn't really go into it. I'm going to click Uniswap here. This is a decentralized exchange. Go back to the class of yesterday to listen to the explanation I gave about decentralized exchange. It's something that functions outside of your traditional financial system. You don't connect your fiat currency to their. It's something that just deals with your money on the blockchain. Now, let me say you just simply come here, and let me say that you get to purchase whatever token you are interacting with, whatever new token that you are interacting with. You simply come here and do whatever task they told you to do. It can be send money from here to here. Just do it over time. What they want is consistency. Like I said, then transaction frequency, transaction value, transaction value, basically, was not important. But the goal is that, like I said, even just using $50, you would have gotten $1,000 here. So I guess that's simple enough for us to understand. You simply have your money on your offline wallet, and you simply use a bridge. If they tell you to bridge, or they tell you to buy, send coins to and fro on their blockchain, you simply use a decentralized wallet and a decentralized exchange to do that. But if you ever have to do that, I said I'll be coaching us free for a month. I can hold your hand and do it live, and we get to know how that works. So now that'll be it for airdrops for today.